In this video, I'm going to talk about why Warren Buffett doesn't own any UK listed stocks. And I'm also going to talk about the performance of my dividend growth portfolio in the 6th installment against the market, and why this is all really important to consider as an investor. Disclaimer, I'm not a financial advisor. If you seek financial advice, please see a licensed professional. So it's the end of the week. Trading actually finished on the Friday today. So the recording has been done on the Friday, although you'll see this on the Saturday. And the portfolio is up by a whopping £3.20, which really isn't a lot considering I've got about 4,400 invested, but it is something, right? Last week, I believe it was down about 120 if I'm right. So it is a step in the right direction. I've also earned dividends. It doesn't mean I've been paid yet, but I've earned the dividends 2 weeks ago by Legal & General and this week by BP, which will be a small amount of income that will go back into my portfolio and be my total returns. However, I won't be paid by these companies for another month or so, but it is worth keeping in mind. Aviva is a share that has actually rallied again as of recent, and I'm actually in the green with Aviva, and it's been a while since I've last seen that. And seeing as they're my largest holding, it would be brilliant if they did rise further. I have continued to average down on companies like Aviva, Shell. I've also done, I'm a little bit unsure on utilities at the moment. I went with United Utilities instead of SSE, but I'm hesitant, I might change my mind, so don't take that too much. I'm losing a small amount each time I change it. It's errors on my own behalf, but I want to be confident in the stocks and companies that I own so that I've got a good pathway going forward. And I've got about £700 in cash remaining, and this money is likely going to be forward to opening a new position, which will likely be with a company, Tesco, to fully expand and diversify my consumer sector. And then the remaining amount of money is likely going to be put into Redrow. It's a company I've been wanting to bump my allocation up for a while. It's just I couldn't find a significant moment of value, and I figured now would probably be a better time than later. And then over the next month or so, I'm going to have steady deposits. I might not necessarily average down, because I am waiting for Realty Income Corp to come to Freetrade. Hopefully it works nicer. If you'd like to know how I research my companies, then click the card at the top right of the video. But it does seem like the stocks are starting to rally again. It seems like they will be quite strong for the coming weeks. However, anything can happen as it is the stock market. Now I would like to talk about Warren Buffett, arguably the most famous investor in the world. And lately he's been doing a lot of selling. Typically he advises to try and buy with good value in mind, and he's currently selling at a low, which doesn't matter if he also buys at a low. But then their shareholders meeting the shareholders meeting for Berkshire Hathaway has also said that they're not planning on buying anything. So it is interesting to think, like, I'm not entirely sure what his game plan is here. It baffles me. But what I am interested in is why he doesn't invest in UK stocks. And it could be a simple answer, it might be a lot more complex. He does invest in some UK stocks through American companies like Liberty Global, right? They own ITV and Vodafone, or stakes in them. So he does have some assets in the UK, but he doesn't have any London Stock Exchange listed equities. And why is that? And in my opinion, I think that the UK market is extremely high valued compared to the US. I'd even say that the US market is quite overvalued. But why does he still not invest when there's great value here, right? Well, I think there's multiple reasons, and it's not as simple as it sounds. Firstly, I'd like to think of currency risk exposure. The pound has been very unstable since the Brexit negotiations started a few years ago. And ever since it's been fluctuating a lot. It did drop from about $1.5 to a pound to about $1.25 to a pound. So for Americans, that means they're getting more value, but then the pound has been priced in for a hard deal with Brexit. And if a soft deal happens, that means the value of the pound is going to rally back up, and it will likely go and return back to its previous levels. And this could present some risk for foreign investors. They don't want to lose money just due to currencies, because it could go either way, right? The currency of pound could be so unstable that it crashes and we have to use the euro, for instance, right? It is possible, so that's one of the risks that maybe he doesn't want to take. And if you've enjoyed the video so far, please click the subscribe button for weekly portfolio updates and monthly stock picks. Cheers. But there's also more. The US has high taxation. It's very likely he would be taxed twice. UK stocks, I believe, have a 10% withholding fee, which means that the dividends paid will be taxed by 10% before the American investors have even received it. And then they are subject to further tax based on their tax band. So this could be an issue. He would be paying a lot of money in taxes, and that simply would eat into the profits, and therefore the high value of the UK might not be as worth it. So it simply just wouldn't be intelligent for Warren Buffett to invest in the UK using the London Stock Exchange, but rather invest in American companies that have diversified globally and have a focus on the UK. And that's what he's done. But you could also assume he doesn't understand the popularity of the products or businesses in the UK because he doesn't live here. So he doesn't really quite understand the ecosystem or the niches that the UK has. And therefore, it means he has a little bit of uncertainty around the investments, and it might be harder for him to decide on which to buy. How well do you understand the American market, for instance? If you're a UK investor and you're investing in US equities, do you know how well they are? Did you think of investing in Tesla before its prices spiked and rallied up, or are you just fearing the idea of missing out? This doesn't mean you shouldn't diversify your investments across countries or even continents, but you should ask yourself what you know about the markets. And if you don't know much about a particular market, then why are you investing in it? Surely an index tracker would do better than that. But if you have various experiences, for instance, you've visited or you've got family or relatives that live in the United States, then maybe it would make more sense for you to have an understanding of what their businesses are like, and therefore you yourself could invest in those businesses because you know of how popular they are and what kind of demand they have. And you will lead to more certainty in your decisions. But is it worth the increased tax, the currency risky exposure, and the potential lack of understanding of the market? Is it worth risking your investments on those factors? And ultimately, I think that Warren Buffett has decided not to risk his investments like that, but rather invest in the US companies that he knows and understands and knows that they can expand into other countries. Besides, the UK has a smaller population, so it's less likely to be making as much profit as a US business, for instance. And ultimately, it is your decision. That's your opinion as an investor, and it's something you should consider when investing. Thanks for watching. I'm Osborne Foreman. Have a good night.